It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, February the 3rd, 2016. Cruising our way through this first week of the second month of the year 2016. Well, did we get enough action today? Did we get enough volatility? Today was a day, incredible volatility across the board. I hope somebody, please, somebody caught that bear trap off the high on both the euro and the gold. We talked about it last night. What a beautiful opportunity. Just kept on going. Boy, oh boy, oh boy. Tons of opportunity across the board. If you listened to the newsletter last night, you were well prepared for today's session. So I hope you guys did well with it. Now, we're only as good as our day tomorrow. So let's get ready for another busy day. Get another busy day. A lot of the charts tonight. We get a lot of conflicting things. We get a lot of things going on for tomorrow. Tomorrow is setting up to be another wild day. So buckle the seatbelts, fasten the helmets on. Make sure you hydrate. Let's get going. Tonight, starting out with crude, S&P, gold, and the euro. We'll start with crude oil. Crude oil is bullish, but after a huge move higher on today's news, we see the market as very expensive at the highs of a channel and a completed measured move on the oil market, which tells us to wait for a bearish correction for a cheaper price to buy tomorrow. We got a really interesting area. You got to look really far left on the oil market. It looks like we might be, I don't know. I'm going to make you wait for it. Got a great chart on the oil just a moment from now. E-mini S&P is bullish with a spike in channel today, but we're at the highs of today's range, which tells us the S&P buyers may struggle to push this price higher. I'll tell you, the S&P looks like it might be the most challenging market for tomorrow. We got a couple different scenarios to look at on the S&P. You'll see what I'm talking about in just a moment. On the gold, the yellow metal is bullish with a spike in channel that appears to be ending in a range this evening, which tells us to expect the buyers on gold to try 2 legs higher tomorrow. But if those bulls fail on the GC, we will wait for a correction back to range lows for the next opportunity. Gold, a wild one today. Like I said, nice prime bear trap at the highs of that megaphone we talked about last night. On the euro, wrapping up tonight with the euro. Euro is bullish with a potential to make one more leg higher. I know, right? How high can this thing go today? But with 3 pushes into an undershoot of the channel, we expect buyers to take profit and wait for a correction to a cheaper price to buy more this week. Now, really interesting on the euro. The euro, in my opinion, is in prove-it territory right now for the buyers, and I'm going to show you why on a daily chart. I know we don't like to bring those up very often, but we're going to take a look at one tonight. I have a jam-packed newsletter in store for you guys. Crude, S&P, gold, euro. But before we jump into our charts for tonight, I do want to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're on our YouTube channel, there's a link right in the description of the YouTube page, of the YouTube video, and that'll take you over here to our trading blog. First of all, I have a free pass for you in the upper left-hand corner. Grab your free pass and come join me as a guest for a day or maybe 2 or 3 days in our live trade room. Grab your free pass in the upper left-hand corner if you're not a member yet here at SOT. In the lower left-hand corner, you'll never have to worry about missing another newsletter video ever again. All you need to do is register for our newsletter mailing list. I need your name, your email address, and then check your inbox because I'm going to send you a verification email. Right below the video tonight, as always, you can download all the charts that you see me using in tonight's video. Don't forget, download those charts below the video tonight. And then over on the right-hand side, you can register as a trial member. Don't forget, the free trial is not the same as the free pass. The free trial will teach you more about how we trade. The free pass, of course, will welcome you into our trade room. And don't forget, over on the right-hand side, we've always got someone standing by 24/7 to answer all your questions. All right. I hope you're itching to get started. I am too. We get a busy one in front of us. But, before we jump in, let's check our news for tomorrow. Tomorrow, Thursday, February the 4th. What do we have on the schedule for tomorrow? Well, tomorrow's a Thursday. So, of course, Thursdays mean jobless claims. We're going to kick off the session. Oh, I should make a note, too, that I believe we got Draghi tomorrow morning at 3 a.m., right? If you're in the European time zone, Okay, I'm here in the west coast of the U.S. You guys are like a day ahead of me there in Europe. But the reality is tomorrow morning, 3 a.m., I believe is the time we're going to hear from Draghi, right? Double check your news resources, but we should be hearing from Super Mario tomorrow morning at, I believe it's 3 a.m. I checked on the calendar tomorrow morning. So heads up on that if you guys are trading early in the European session. Tomorrow morning in the U.S. session, though, we get jobless claims here at 8:30. Factory orders at 10 o'clock. That's all we'll be worried about tomorrow. Now, one thing to be aware of. We talked about this earlier this week. Look right, and we are going into the employment situation as we know it effectively as non-farm payrolls on Friday, right? So we heard from the ADP number, right? Not a stellar number, but supported our averages above 200,000, and that's going to lead into Friday's non-farm payrolls. We're going to talk about Friday's non-farm payrolls tomorrow in tomorrow's newsletter. But what I want you to be aware of is that tomorrow afternoon, okay? Tomorrow afternoon, it's going to start getting a little bit sleepy out there because remember, Friday morning we have one of the two biggest news events that we get as day traders. What was the other one again? We talked about it on Monday. It was last week. You got it, FOMC. That was one last week, right? There are only two big news events that have long-term impacts on the markets that we trade. Most news events just shake things up for a moment and they're back to where they were, right? The employment situation, or what we call it, non-farm payrolls, right? Non-farm Friday. It is a scenario where at the end of the session on Thursday, right, and my definition of that is going to be after lunch, right? So lunchtime or later tomorrow afternoon, you really got to be careful because there's going to be lower volume and people are going to start positioning themselves ahead of that Friday news. What I always tell people is the best price action, the best opportunities are always going to come between 3 a.m. and 11:30 a.m. Eastern Standard Time every day of the week, right? It's the London into U.S. morning session. The afternoon session is always going to be a little bit less liquid. It's a little bit more filled with gamblers, right? It's just not as consistent because professionals aren't in there doing work, right? The morning session of the U.S., right? The morning session in London, there's work being done, right? People are doing work. In the afternoon sessions, they're digging themselves out of holes, right? They're playing with house money, and that usually results in traders taking bigger risks. And bigger risks are not good for new traders because when things whip around, right, we tend to get in trouble as new traders. Bottom line is, tomorrow afternoon, careful. If it's fallen asleep, don't push it because you know why it's fallen asleep afternoon tomorrow is ahead of that employment number on Friday morning, right? So tomorrow morning is the time to get at it. Careful tomorrow afternoon ahead of the non-farm payrolls on Friday, and we'll talk about the non-farm payroll report in tomorrow night's newsletter. All right, let's get on it. Let's keep going. Moving on to the newsletter charts for tonight. Thanks for sticking around with me, by the way. Let's start with crude oil. Crude oil is bullish, but after a huge move higher on today's news, we see the market is very expensive at the highs of the channel, and it completed measured move. As you can see, that measured move higher as well. This tells us to wait for a bearish correction for a cheaper price to buy. Today's inventory report sent prices higher this morning with a bull wedge that broke, retested, and finished with a micro spike in channel, just screaming strength. But if you zoom out and look left, you can see this is a very interesting area that has been tested before, which tells us there was a definite purpose to this move today, and buyers will want to wait for a deep correction before buying more. Sellers are looking for buyers to fail at these highs, and then they need to hold the pullback to take control back to support levels higher. Now, that's a big mouthful right there. Let me get that off the screen here just temporarily, and then let's look at this chart. First of all, looking at the chart, you can pretty much kind of slice this day in half, right? The move really began after the news came out. If you recall from yesterday's newsletter, we were bearish. We waited for a correction and sold it back down. Beautiful opportunity, but just like I talked about in last night's newsletter, once 10:30 comes around, timeout, all bets are off, and look at just a complete turnaround, right? We're not trying to predict that turnaround, right? You look left, and again, it was very easy to see we got exactly what we were waiting for early in the session today, right? Bearish move lower, wait for the correction, and sell it back down. excellent environment today. Actually, one of the best price action environments we've seen in over a week on oil. It's been a little bit whippy, right, the last week and a half. Now, the reality is, major news comes out. Look at the strength with this. This is incredible. We don't see this very often. Looking at this, it's just a spike in channel. But look inside this spike in channel, right? It's a spike in channel. That's all it is, right? Spike in channel. It is an A, B, C, D on the way up, right? And we know that spike in channels are strength, right? Spike in channels scream strength, but we also know not to be fooled by a spike in channel when it corrects, right? It's going to want to correct down to the base of that channel. Gosh, how much money have we made over the last few years in this newsletter, right, by using this pattern alone, right? By the time it corrects back, the sellers think it's bearish, right? And then we can, of course, buy into those seller failures, right, for move back higher. So, again, it is a spike in channel in kind of the broad stroke here. As you can see, it's a spike in channel. We're way, way, way up at these highs right now. We may get a trap and then push one more leg up. But, again, you got to look at this as a very expensive market right now. And, you know, like I always say, you got to be patient to buy low, right? Not buy high. If you miss this move, it's okay. Just wait around. There's going to be another opportunity coming right around the corner. You don't need to buy this high right now. Trust me. If you watch this newsletter enough with me every evening, you should know by now, right when you start thinking, right, it's never going to turn around, it is going to turn around, and your patience will be rewarded. So buyers right now want to see a nice deep correction, right? And then, of course, buy into seller failure. But let's dig into this a little bit closer. As you can see here, spike up, but look closely. This is a bull wedge. Now, bullish wedges, like we talk about every evening, have a bearish bias to them. Once they get down to the point, they spike lower, right? And then, of course, they'll correct back higher. And you can see they corrected right back to the point of that wedge, right? Now, that's usually where this market says, okay, we're good, right? We get the bullish wedge, we correct lower, we finish up into the point of the wedge, and we come back down. We usually come back down hard after that correction, right, and then snap higher. But apparently they weren't done today. They push it higher, and if you look closely, it actually goes right into a little micro wedge as well. And look, it even breaks and goes higher from there. I mean, this is insanity. This does not happen. A bull wedge break retest into a bull wedge that breaks and continues higher. Oh, God, it's like seeing a unicorn or getting struck by lightning twice in one day. It's extremely bullish. Okay, so there must be something more to this information, right? What would cause these buyers to blindly buy into these highs right now? There must be some news. There must be some noise. There must be something out there, right? Well, the Russians, the Iranians, the Venezuelans, they came together today and they said, we're looking for an unscheduled meeting, right, of oil producers. That might be what explains this, what I would call blindly, almost irresponsible, almost reckless bullishness at those highs. You just don't see this very often, right? So I'm led to believe there must be something else bigger out there. Again, check the news headlines. We've heard this before from the Russians, right? We've heard this before from a lot of folks over the last few weeks. Everybody wants a non-scheduled OPEC meeting. It continues to fan the flames. It gets everybody excited, and then it dumps right back down. Just look left. That's a good idea. Let's look left. Now, if we look left here, I want you to see exactly where we are. Take these, and I could keep going left a few more weeks too, but take these lows and go all the way across, right? And you can see we are at what I call a reversal line. So we're going to see a few of these today on the newsletter. This is what I call, this is prove it territory, right? This is prove it territory. In my opinion, this becomes one big range. 35 is the high of that range, right? That's what the bulls are hoping to get out of this move, right? And of course, 33 is going to be the low of this range. Okay? Now, aggressive buying. A smart buyer right now is waiting for a pullback. If that pullback holds, we're going to shoot into that range overhead. But if it fails, though, and again, you almost got to think, this is where I say there's no way this market can keep going at this pace right now. But you know me, I'm going to bite my tongue on that, right? I can't even say the word no or never or always, right? That shouldn't even be in our vocabulary as professionals, right? It shouldn't be in our vocabulary as humans, right? The day of never or always are over, right? Were you not around in 2008, 2009, right? That term doesn't describe this anymore. So, bottom line is, we're very expensive right now. And right now, you want the buy, right? Buyers are hoping that they get a chance, right? A two-legged correction back down. The spike in channel takes us all the way back to that 30-half area. So that is literally where that correction may go before we get this next snap higher. And again, we looked left and we saw that, right? We saw that what I call a reversal line here acting as resistance. And this is where I assume again, you could blame it on the news we heard today, right, out of the non-scheduled OPEC meeting, whatever you want to call it. But the technicals don't lie. We've got major resistance here overhead. A bullish market is going to race towards resistance. Buyers are expected to take profit. And as price goes lower, let's play that game for sellers and buyers, right? So now that we kind of have our bearings here right now, and I apologize I went into such detail on that, right? But I wanted to make sure I covered all the bases. Okay, first of all, sellers, you guys are the regressive ones. Who has control right now? The buyers have definite control, right? I mean, you've got to be blind to see that, right? So we know that the buyers have control, which means sellers, you guys need to see a lower low, hold a pullback, and that will give you your first opportunity here to be confident that you're going to get a chance to sell down to these support levels, right? So sellers right now, you got to be careful. Again, very much a bullish market right now, but a lower low, holding the pullback, that will give you confidence, right, to sell down to those support levels waiting for you below. And if you're a seller, your ultimate objective is going to be to get it down to that 30.57. There's also a trend line here that I drew in, right? This is a really tasty area, 30.57, 30.50. That whole range down there is going to be a really desirable area for the bulls. It's also going to be a great medium to long-term target for the bears, depending how tomorrow, right, sets up. The big thing, though, for the bears is be careful, right, not selling into these support levels below. Now, what if you're interested in being a buyer? If you're looking for a buyer, what I'm looking for is a two-legged correction with at least 10 candles each, right? Two-legged correction with at least 10 candles. What I'm looking for is after that two-legged correction, I'm looking for the sellers to try and fail to be a buyer going back. Now, here's the reality. I don't know when that's going to happen. It's very bullish right now. It may just go little correction back lower, sellers fail, and we may make that next push higher. The ideal scenario, like I said, is for the bulls to get it back around that base of the spike in channel, right? That's the ideal scenario. All I know right now is the most desirable buying opportunities are going to come after at least a two-legged correction, then into seller failure, and you can buy into seller failure. If you don't feel confident buying into seller failure, new higher high, hold the pullback, and then the buyers have control, right? New lower low, sellers hold the pullback to grab control, two-legged correction, sellers fail, new higher high, bulls hold the pullback, now they've got control. Just be aware, there is a ton of resistance here at 33 even. Once we successfully get through that, though, we may see a very, very strong kind of suction, right? Almost sucking that price up towards that 35. This is going to be a very interesting scenario. Bulls are waiting for a deep correction, right? Buying into seller failure. Sellers want to see a lower low, hold a pullback. I'll tell you right now, though, being a seller, you really got to be patient. Make sure you've got proof that they hold that pullback before you look to sell anything right now in the oil market, right? Do not try to call a top right now on this because this thing can keep grinding higher here whether we like it or not. All right, let's keep going. I know we covered a lot there on the oil. Now we're going to go to the hard market tonight, right? This is a really challenging chart for the S&P traders. The E-mini S&P is bullish with a spike in channel. but we are at the highs of today's range, which tells us the buyers may struggle to push this price much higher today. Today is one big trading range, and we're right at the stinking highs, which tells us buyers will be taking profit and sellers will be entering short up at these highs. We also see a recent spike in channel for the bulls, which I think is probably the most important information. That bullish spike in channel, which you can see right in the middle of the chart, has already corrected lower, telling us to expect 2 measured legs higher in the short term. Buyers want to see a breakout pullback that holds above the range highs. Sellers want to see the highs hold as resistance and the buyers fail on the next pullback to sell these highs. This is a train wreck waiting to happen right here, folks. This is a very difficult environment. Okay, let's talk about it. First of all, I see 3 main components to this chart right now. The first one is the range. We go up, we go down, we go up, right? And this, of course, creates a big range. If you were to look at this on a daily chart, this would be a big wick, right? And a little tiny body, right? It would be a very bullish doji, but it's still going to be a doji on a daily candle right now. Now, dojis do not give long-term traders, right, very much confidence, and they'll usually fade the edges, right, of a doji. Selling high, buying low. It's a one-candle trading range. Okay, so remember, when you find yourself in a trading range, buy low, sell high. Right now, where are we? We're at the highs. Difficult to be a buyer at the highs. Right? Buyers want to wait for a correction back down to those lows, right? Sellers would love to see this next breakout pullback fail to give them some juice to sell this thing right back down. The second component is going to be this long-term, what I would consider to be kind of it's not a reliable channel. Now, who knows why it's not a reliable channel? We're going to see who's really watched my newsletter. Here's why. Are you saying it? You say because of the range? Absolutely, absolutely. Whenever you see a trading range, you've got to discount the value, right, of that channel. It's not to say that we can't use the channel highs and the channel lows as support and resistance, right? That channel high overhead will be resistance, right? The channel low below will be support, right? They are support and resistance. But what we will not be able to rely on is rotation. Right? It's a range. It's not really a very good channel, right? We've only got one high, a double top, double bottom, to low. It's not a great looking channel. You have to see it though because it lines up a little bit too perfectly with all the boxes checked. This is not the type of channel though that you can really rely on. And again, it's all because of the range. Write this down. Whenever you have a range on a chart, you find the channels, but you've got to discount their validity. You've got to discount their value. The highs and lows are going to be support and resistance. I don't want to buy into the high of the channel, right? But it's not going to be as necessary to see rotation, right? Remember rotation, channel rotation, low to high, right? High to low, okay? So rotation is off the table, at least for now, until we see more information, right? Because the range, of course, will take the precedence. Now, as we're watching this candlestick push higher here, this is what I think is the most important information that we're seeing right now in this chart. It's the recent spike in channel. Now, you've probably read a couple of those trading books out there, right? Most of them are kind of worthless, to be honest with you. Any trading book that's not about a story of a trader. That's one of the reasons why I tell everybody, read those books on the market wizards. Right? Jack Swigert, all of his stories of traders, those are great books because they share with you the struggles of real people, right? I really love those books for new traders. What I would not recommend is any book on technicals or trading strategies that's literally over 24 months old, right? Because it's not relevant. The markets are always adapting, and we're using what has been passed on to us over generations of technical traders, but we're applying it to today's market, right? If you think you're going to go pick up a book at Amazon that's 15 years old and think you can still use those same tactics in today's markets, it's not going to work. It's not going to work, right? The same basic principles will apply, but you've got to apply them a little bit differently. The bottom line is, right? The bottom line is, in a lot of trading books, they talk about recency, right? Recency is the most important thing. And that's definitely applicable to today's markets. It always has been, right? What's happened most recently? And what's happened most recently is this bullish spike in channel, not to go off on a tangent there. The reality, though, is we have a bullish spike in channel, right? We got the correction, and now we're in leg number one. Okay, after a spike in channel, does anybody remember, since you guys are experts and you watch this newsletter every evening, what do we know about a spike in channel? It's a strength pattern. We also know that when it breaks down, right, it'll usually correct back to the base of the channel. But then once it goes higher, we know to look for, you got it, an A, B, C, D. Good job. A, B, C, D, right? So that's the target, right? That's the target if these bulls can put this together, right? Now, take a look at this a little bit. A, B, C, D, right? And it puts us now up in this territory here around that 1935, right? 1930 area where I have that major resistance marked up. Okay, so bullish spike in channel. Bullish spike in channel has already corrected, right? Not as far back as we expect. Now we're looking for two legs to complete the larger measured move. Okay, so buyers, that's your target overhead. That 1930 is the major resistance to 1935. That's your target. Now, because we're at the high of the range, let's play that game. What if price goes higher? What if price goes lower? If price goes higher here, you've got to be aware this reeks like a trap because you're at the high of the range. When you're in a range, buy low, don't buy high. So what I'm going to be doing tomorrow is I'm going to be looking for sellers to fail. I do expect to see some profit taking here. If it pushes higher, I'm expecting to see this price correct. I'm going to look for sellers now to try to sell it. And if they fail, I'm going to try to buy it on a pullback, but after I see sellers take the bait, right, for a short-term move lower. That's going to be, well, it's what I call my breakout pullback, right? I'm not just going to, it's very rare that you get a perfect breakout pullback and go. What usually happens is you get the breakout pullback, right? It runs you out, and then it goes. And ultimately what you're doing is you're buying into the stop losses of those sellers. It's going to be tricky at these highs. Don't buy the high. Wait for a new high. Wait for it to pull back, right? Look for proof. I like to look for a bear trap on that pullback, right? Because I'm at the high of the range. You got to be a little bit more creative at the highs of a range to be able to get in the safe way. Okay? Then, of course, your target's waiting for overhead. Now, if that pullback fails and we tumble off these highs, you know where we're going here, right? We have a gap to fill at 1895. We have a trend line support waiting below. And remember, this is a trading range. If the blood really hits the streets tomorrow, 1866.41, that's going to be full range rotation back down. You got to give the benefit of the doubt to the buyers right now because that spike in channel. But again, like I said, I think it's going to be really challenging around these highs. Don't buy the high, right? Don't buy the high. Wait for a pullback. Again, look for sellers to try to sell it back down. I'll be looking for them to fail to buy into it. That's a safe way to buy that pullback, right? If they do fail at these highs, right? They're gunning for the gap, they're gunning for the trend line, and they're gunning for the low because, again, this is a trading range. Guys, excellent work today on the S&P. Very, very, very good chart. Let's keep going. Next up on the gold, and I better hurry up. I'm taking up too much of your time today. Gold is bullish with a spike in channel that appears to be ending in a range this evening, which tells us to expect the buyers to try 2 legs higher tomorrow. But if they fail, we'll wait for the correction back to the range lows for the next opportunity. The bulls had a clear control of this market today, and they finished with a spike in channel that is an overshoot followed by an undershoot and an attempt to push higher, which appears to be nothing more than a trading range. The overshoot appears to have been what we call an exhaustive move for the buyers. Just the way that overshoot looks right now, it looks like those buyers just said, that's about it, and sold it, right? Those big, big red candles that we saw after the overshoot correct back lower. And you'll notice all these green candles, they don't really look too impressive. Right? The bear candles look a whole lot more punctual, right, than the bull candles do that followed it up. But nonetheless, though, we do have a spike in channel, right? Again, you guys are experts on this, right? So we corrected lower. Now we're expecting to finish off that move A, B, C, D. Woo! That's a big move higher, right? Will we get that? Will we get that all in one stroke tomorrow? It's his goal we're talking about, right? Wouldn't surprise me. But what is more likely here right now, though, is to see another leg of this correction, right? Dig down, right? Dig down into some of these lows down here. That's going to give the buyers a little bit more meat on the bone, if you will, right? Two-legged correction. That's where your best buying opportunity is going to be tomorrow. Now, again, we are in prime territory right now to shoot higher, breakout pullback, right? I told you guys how I'll look for that, and then a second leg, right? So if we do take off higher, look for a second leg, right? Two legs up that will create and fulfill the mission, right, of the long-term spike and channel up around the 1158 area, right? If I had it my way tomorrow, I'd be buying on a deeper pullback, right? Looking around this area right here, 1135.5, because that's going to be the deep correction for the spike and channel, and it will also, of course, trap out some of those buyers, right? Think about it. There are definitely some buyers who are still holding positions right now because none of these swings have been taken out. Think about it. If you were a buyer and you bought, where would your stop be? Your stop would be down here, right? They'd be hanging out below some of these wicks. So if I know this market, like I know most of these markets will, after such a strong push higher, and again, there's no reason why it can't keep going higher, and if it does, you've got the ammunition, you know where we're gunning for, right? But what is more likely is for the buyers to take some profit, wait to get everybody all frustrated again with some stops to get run, right? Trap the sellers and make those buyers chase. Right? Markets love to trap low and then make them all get back in, right, and chase after it going higher again. It's one of the most challenging things for a new trader to understand, and it goes against everything that is a human emotion, right? It really is. And that's why we get paid so much as traders. It's why there's opportunity. It's because it's so darn difficult to keep our fingers off the mouse, right, when times get tough. Now, it's prove it time on the euro right now. It is prove it time. Look at this market. What the heck got in the pentalodes on this thing? Jeez Louise, this thing literally 1, 2, 3, 4 legs up today. Now, I got a little bit of a surprise for you guys. I know I talk smack about daily charts all the time. This isn't a daily chart, though. It's a 1440 minute. I know. It's a daily chart. Rather than using daily data, guys, if you load a daily chart, you get daily data. Okay, load a minute chart, a 1440 minute, and you get much more accurate daily charts. There's your lesson for the day. Now, are you seeing what I'm seeing? Okay, first of all, that candle's legit, huh? I mean, that candle, that's a statement candle right there. Holy Christmas, right? That's a big candle. Anyways, spike, bull flag, trap low, right? It meets all the criteria. I've been watching this bull flag for a while, right? Beautiful bull flag, and just like a bull flag should, it traps low, right, and then shoots higher. Well, the reason why I'm talking about this is because that's the 200 moving average right there. This is prove it time for the bulls. What happens a lot is we see price break and close above the 200, but then the very next day, it just pummels these buyers, right, and corrects lower. I have reason to believe that if we can close tomorrow above the 200 moving average, we're going to see quite a few bulls enter this market. At this point right now, I don't think the average professional can look at this and say it's going to keep going higher. I do see it, though, as a break and a close. The key is the close above that 200 EMA. Tomorrow, they've got to hold it. If they can't hold it, this now will collapse right back down into this little comfortable range they've got going on down here, right? Okay? So tomorrow's prove it day, in my opinion. Tomorrow is definitely prove it day. It would make all the sense in the world to see a huge red candle for tomorrow's daily candle, and this price sells off. Then you look back at the chart and you go, oh, really? Sell off? You mean back to 09375 where there's a juicy gap waiting to be filled? You mean like that type of sell-off? You mean like back to where we came from? Like that type of sell-off? Absolutely. That's potential for tomorrow. Now, obviously, I am not predicting the future. Okay, my crystal ball stopped working a few decades ago. Okay, so remember, wait for proof. But if we end the day all the way back down where we came from, don't say I didn't warn you or give you an example of why that might happen. Now, all the fantasizing is over with. Now back to reality. Okay, again, I only can go too far as anticipating. What I say is don't think so much, Joe, right? Don't think so much. Trade the chart, right? Here's the chart. Is the only chart you need. Euro is bullish, just a little bit bullish, with the potential to make one more leg higher. We do actually have the potential to make one leg higher. We've got an A, B, C, D, right? We have the potential for one leg higher. I mean, literally, this market will need to be on crack to make this next leg. I mean, look at this thing, 4 legs up today. Anyways, bottom line is with more than 3 pushes into an undershoot of that bull channel, right? Undershoot of that channel, we expect buyers like they should to take profit and wait for a correction to a cheaper price before they buy more this week. Now, the euro made a big push higher today and still has another possible leg to make, like I said. But with so much profit on the table for the buyers right now, we expect them to take at least a large portion of that profit and put it in their bank accounts. We also see the euro is closed again, like I said, above that 200 moving average in the daily, which means tomorrow is prove it time. Looking at today's charts, there are plenty of opportunities for the bears to send this price back lower if they can't hold it. So we've talked about this a lot today so far, right? A 2-legged correction, right? That's what we're waiting for. Look at this delicious little triangle here, right? If I had to guess right now, that's where that correction is going to go. Somewhere in this range right here. Right? Well, I am crazy, but you can call me crazy anyways. But the reality is, though, I'm really expecting a 2-legged correction, right? You can see I've already given you kind of a template for it here, A, B, right, C, D. And again, the tip of that little cute little triangle right there is at 0715. It may go a little bit further than that. 2-legged correction. The buyers are now looking for the sellers to fail, allowing the buyers to buy into their stop losses, then pullbacks. Guys, the original, right, the initial target for this, if we get the correction, is back to the high. And then, depending on how far back that correction goes, then we have a measured move on our plate, right, for a monster leg higher. Again, we'll have to wait and see how far back that correction goes. But for the bulls right now, you're looking for a correction lower, followed by seller failure, right, to buy it lower. I'm waiting for a bullish correction lower. If they keep holding that pullback, right? The only thing you got to worry about here, if you're a seller tomorrow, is this area right here. This will be major support. But if we break lower and hold that, right, hold that pullback for the sellers, big round number, right, buy zone. And again, if we start seeing this thing take off the downside tomorrow, watch that unfilled gap at 93.75, right? Because if we look left here, we can see there's a lot of interest in this area right about there, right? That 9,200 area. So that's what we're looking for to collapse tomorrow if we get it. If we get it, that's the key component. I don't want to get any emails tonight saying, Joe, you said it was going to collapse. I sold it. No, wait for proof, right? Wait for proof. Wait for this bullish correction. Wait for the bearish correction. Once we get the correction, then if the sellers fail, right, we're looking for it to move back to those highs. If they hold it, now we know there's potential here, right, for that bloodbath to occur tomorrow. I can't wait to see what tomorrow brings. I got to say, though, there are some challenging environments out there tomorrow, so be careful, right? Be careful. I know these charts are giving a lot of different opportunities, and remember, you don't have to do this by yourself, right? You don't do this by yourself. Come out and join us. We open up our trade room tomorrow morning at 8 a.m. Eastern time. And, of course, we'll wrap up we'll wrap this week up with our Thursday edition of our newsletter tomorrow night around 8 p.m. Eastern time. Guys, thanks so much for being here. Sorry I took too much time tonight. Join the free trial, learn more about our levels of membership, and don't forget, I've always got someone standing by 24/7, 365 to give you guys any answer to your questions. My name is Joseph. Now get out of here, you crazy animals. I'll see you tomorrow morning at 8 a.m. Be well, all right? And be nice to each other, okay? I'll see you next time. Adios, amigos. Bye-bye for now.